Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
J-Love, I'm doing good. How you doing?
Always making it happen, big man. Today's guest is Keith Weinhold. Keith, the founder of Get Rich Education, hosts one of America's top investing shows with thousands of listeners. In 2002, when it was time to purchase his first home, Keith transformed from a rent-paying tenant into a real estate investor overnight. He bought an Anchorage, Alaska four-plex, living in one unit while renting out the other three. Today, Keith and his wife actively invest in income-producing property nationally and internationally, from U.S. apartment buildings to offshore coffee farms. Hopefully, we'll get some coffee education today alongside some real estate education. So without further ado, Keith, welcome to the show.
Hey, thank you, Jake and Gino. I appreciate being here.
So why don't we get started? Tell us a little bit about your background and how you got into real estate.
Well, I was born and raised in Pennsylvania, and I did not come from a real estate or entrepreneurial family at all. But my parents taught me to be aspirational, vacation a lot, live a good lifestyle. One of those places I vacationed was Alaska. I vacationed in Alaska 4 times. And finally, in 1999, when I was really young, I made the move to Alaska. And I still live here in Anchorage today because it really fits my interests. And a couple years after moving in Anchorage, I guess I fell in with the group of friends that I would just call really productive, aspirational sort of friends. And a couple of my friends had bought a four-plex building in Anchorage, Alaska as their first home. They lived in one unit and rented out the other 3. So when I was sort of coming of age, it was the year 2002. It was about time for me to buy my first home. I had only been a renter my entire life. I had never owned anything. So overnight, in 2002, I purchased an Anchorage, Alaska four-plex building for $295,000, starting out by living in one unit and renting out the other 3, as you have already described a little bit.
Did you make any money on it, or did it at least pay for your rent?
Actually, really, Jake, all it did was pay for my rent. I really wasn't getting any positive income or positive cash flow. And by the way, I didn't even know what the term cash flow meant at that point. So with the $295,000 property, the rents on the building were about $750 when I purchased it. And so my rent income was really just paying for all of the building's expenses, the principal, the interest, the property taxes, the insurance, and any maintenance and repairs. So I was effectively living for free,
Yeah,
so there was
great.
some net benefit that way.
That's fantastic.
Keith, why real estate? Why did you choose real estate?
Yeah, that's a great question, because when I started off, I didn't even know what terms like cash flow or leverage meant there, Gino. So it was only after I owned the building a couple years, and these were really in appreciation years, 2003, 2004, 2005, that I started doing some reading at a local Barnes & Noble, and I started to figure out what leverage was. So, you ask a key question, why real estate? I think you constantly have to ask why. People don't ask why often enough. It's because the rates of return just absolutely decimate what most people think of as sound investments. A common rate of return in real estate, in fact, I think it's disappointing to have an annual rate of return of anything less than 25%, which, a stock investor just has to suspend disbelief a little bit before they can wrap their mind around that. Whereas a stock investor is lucky to get 10%. But you really need to look at your rate of return net of inflation. If the real rate of inflation is 5%, well, if you subtract that out, you're getting 20 at least with real estate, and you're only getting 5 if you're lucky with stocks. So it's rate of return. And once you understand where your return comes from, you can be a better investor, and you'll always be in real estate once you understand it.
That is really key. I like that because
I like that too.
we don't look at all the different possibilities and the rates of return from real estate. Can you give the listeners your opinion or your basis of where you're getting these different points from rates of return from real estate?
Yeah, great question. Let's look at what most people think about stocks. With stocks, you can get returns from dividends maybe, but the average dividend in the S&P 500 is only 2%. So when people buy stocks, they're basically just looking for capital appreciation. They're basically looking at hope, and hope is not a strategy. They're hoping that the share price of the stock goes up. Well, with real estate, it's not as speculative. You're not hoping. So once you understand with real estate, you're paid five ways at the same time when you get a loan for cash flowing real estate. Number one, you're paid with appreciation, and that appreciation benefit is greatly amplified with leverage. Number two, you're getting the cash flow. That's on a monthly basis, the rate at which the income exceeds the expenses, that income from the tenant. Number three, the tenant is paying down your loan for you. Number four, you get great tax benefits like depreciation and the mortgage interest deduction. And then fifthly, you're getting an inflation hedging benefit. So you add up all those rates of return, and anything less than 25 is extremely disappointing. Now, there are a few rates of return there which, maybe everyday investors don't understand. Take that third one that I mentioned. You get the loan amortization benefit. Well, every month, your tenant's paying down your principal for you. A lot of people that own their own personal home, they think, oh, well, I get the same benefit of loan amortization in my personal home as I do in your income property. Well, no, you actually don't, because in your own home, with that monthly principal pay down, you're having to earn that money yourself just to get the principal pay down benefit. And with income property, your tenant's doing that for you as long as you have positive cash flow. So you're paid five ways at the same time. That's why they say that income property owners get wealthy in their sleep. And most people don't even understand all the ways that they're getting paid with income property, even as they own it.
Wow. Now that you laid it out perfectly for the listeners, what is your investment focus in real estate? What do you like to focus on?
Well, it's probably mostly multifamily property in Anchorage. This is a market that I know, and there's a highly transient population here, Gino. A lot of people move here, husband and wife, and the wife can't stand the cold weather is how it usually is, and then they move out. So that's very conducive to renting. We also have a significant military presence in Anchorage, Alaska, so that's conducive to transiency and conducive to renting. So multifamilies in Anchorage have been good for me. And then turnkey single-family homes in select markets in the 48 states as well. So that's where my investment focus is physically. And, now I guess when it comes to my investment properties, my focus is really doing as little work as possible as it relates to my income properties. So I'm providing a good product. I want to provide people with housing that's clean, safe, affordable, and functional. That's part of my mission. But my investment focus in that is not to be the manager, not to be the one that does everything. It's actually to do less.
Sounds like you're creating a lifestyle for yourself.
Yep. I like it. Like, as Jake likes to say, I'm. We always bring this up. It's I'm going to do this, I'm going to do that. And I'm sure in the beginning we all start out that way, but as we progress and as we, age and as we get that experience, you start moving away from that and start doing what Keith's starting to do right now, which is what I love. I mean, Keith, how has your investment strategy changed over the past 5 years?
Yeah, that's great. Well, it's changed in a couple ways. First of all, I guess just to touch on something you're talking about, the I'm a thing. I'm a want to do less, okay? Most investors, us as investors, we have all these metrics and numbers we get excited about. What's the cap rate? What's the cash flow? What's your internal rate of return? What's your return on investment? What's your cash on cash return? But the one investor metric that's the most important that you'll never, ever see on a Microsoft Excel spreadsheet, that is what is your return on time invested. So, I specialize in outsourcing other things to people so that I can live well. That's why we're investing in real estate anyway. We want to live a good life. We don't want to do more. We want to have more freedom and flexibility in our life. So it's a lifestyle arbitrage. Okay, so that's some of the change that's taken place over the past 5 years. And then I'd say physically, with the change that's taken place, it was about 5 years ago that I started investing out of my own market.
And how did you do that? How did you end up deciding to go out there, and how do you analyze markets out of your market?
Yeah, great key question. The why for doing it, a lot of this comes down to why is, I started to realize that, I live in a place that's relatively geographically isolated, as good as the lifestyle is here in Anchorage, a city of 300,000 people. But here in this state, we're so dependent on what the price of a barrel of oil is that it just was not prudent to keep investing here in my own market. And you know what's happened with the price of a barrel of oil lately? It's been frightening. So as layoffs have been announced here, a lot of the oil companies in Anchorage. So luckily, about 5 years ago, I learned about the real estate guys, Robert Helms and Russell Gray. I listened to their show. That caused me to think in more expansionary ways, and it showed me the importance of investing in other markets because the market is more important than the property. I'm in a market that's not very economically diverse. So I started out investing in Dallas, Texas, because you have a very diverse economy. You have a lot of Fortune 500 companies. And at least at that time, about 5 years ago, you had rent-to-value ratios that made sense to buy in the Dallas-Fort Worth market, a rent-to-value ratio of about 1%. So where you want to get at least 1% in monthly rent as a proportion of the purchase price. So, for example, for a $130,000 property, you'd want to get a rent income of at least $1,300 so that the numbers made sense. And you want to do that in a good market and be introduced to a good provider and a good property manager, which I found through the real estate guys. So it's really leveraging someone else's expertise in order to get the trust to invest out of market.
No, I like that. I mean, as far as your market in Anchorage, would you call it a market that just cash flows and there's very little appreciation going on in Anchorage?
There isn't any appreciation going on in Anchorage now as things are really precarious with oil, but over the longer term, back in the heyday when real estate was really appreciating rapidly in the 2000s up to 2007, when a lot of markets saw, some markets saw 20% or greater appreciation. Anchorage saw about 8 to 10% appreciation. So we don't have the big highs and the big lows that maybe a Miami or a Phoenix or a Las Vegas does. And here in Anchorage, you really cannot find a rental single-family home that's going to provide cash flow. The average single-family detached home price is about $360,000. That's the median, actually. You really need to get up to a four-plex until you can get the economies of scale such that something cash flows. Your average 30-year-old four-plex is going to cost $500K, and you can get $5,000 of rent income. So there's that 1% rent-to-value ratio where the numbers start to make sense.
Wow, I really didn't think that Anchorage property values in Anchorage were that high. Those are pretty high numbers there.
Yeah, you know what's paradoxical, Gino? What is ironic is the fact that we live in Alaska, this huge state. There's actually more caribou than people in this state. But yet Anchorage, the biggest city, where almost half of the entire state's population lives here in Anchorage, we're on this thin strip of land between the ocean and the mountains, so we actually have a land shortage, and that contributes to higher property values, and that just blows people away because you're thinking you're in Alaska, this place with huge wide open spaces. We're the size of maybe 6 or 8 other U.S. states, but yet we have a land shortage here in Anchorage, contributing to those high prices. We also have a short construction season, because we have these big freeze-ups in winter where you can't do much construction, and that contributes to overtime rates. And, of course, almost all the construction materials have to come from a long ways away, too. So those all push up on prices.
Well, Keith, you've made a great point. Something called the barrier to entry in a market. You're describing what's going on here in New York City and Boston, Massachusetts, where there's just high barriers to entry. There's nowhere else to build in Boston. That's why it's so expensive. And I would have never thought in Anchorage that's the same thing. So I think the key to that is, guys, when you go out to a market, really take a look at the market and really analyze it well, because I never would have thought Anchorage was a high barrier to entry market. So thanks for that. Wow.
Yeah. And just to drop back for a moment, Gino, to talk about the barrier to entry, to your beginning listener that's listening right now thinking, gosh, how do I get my foot in the door? How do I really get started where there's a high barrier to entry? Hey, starting off with the four-plex, the way I did, that is still a program that's available to people today where what you need to do is live in one unit, rent out the other 3. A four-plex is the most units in a building that you can do this with. You can do this with just a 3.5% down payment with an FHA loan as long as you live in one of the 4 units for 12 months. And your minimum credit score only needs to be 580. So a 580 credit score, a 3.5% down payment. And before you even move into the building, you can use 75% of the existing tenant's rent income. Just show those leases to your loan officer, show the existing tenant leases to your loan officer, and you can use part of that income toward your qualification income. So you're using other people's money before you've even bought the building. Now, that is a great way for someone potentially to start as long as they're in a good market.
Yeah, you're casting a really wide net there to catch a lot of folks. I mean, a lot of people, well, I don't know where to get started, and I think that's a great piece of advice. Someone told me the same thing, about 8 years ago. Unfortunately, I never took that advice. I think it would have been good for me at the time, but I love that. I think that's a great strategy.
Well, Keith, what I like about it is you become an entrepreneur overnight, because if you don't like real estate dealing with this four-plex, you've solved the problem. You're not going to continue to buy more real estate. You can always sell what you got. But if you like it, you've got the bug, you're going to get that management experience, and you're going to be able to build from there. So, I mean, it's a great way to jump into real estate.
Yeah, it is a great way to start. I'm not going to say it's always easy, because you will have some of those difficult tenants. It's called property management, but it ought to be called tenant management. And managing tenants can make you lose faith in humanity.
Yes.
But you will learn some early lessons. And, part of the management hassle is having to make all these little trips. Well, you're living on site. You're basically a resident manager. So you're not getting quite as much of a runaround. You're still going to have some difficulty, but it's a great way to learn management lessons and really throw yourself in there. A lot of the most successful people in life, they're not necessarily the smartest. They're not even necessarily the hardest working, although they might work hard. They are often the boldest. So making bold actions, like buying a four-plex building, living in one unit, renting out the other three, that's what really propels your wealth, oftentimes more than being intelligent or even being hardworking.
Jake likes to say knowledge is not power. Knowledge, knowing something, but taking massive action is what powerful is. So I agree with that totally, 100%.
Knowledge plus action is power. Yeah, absolutely, Gino.
Totally.
As soon as you want something, and your head knows you want something, and your gut backs it up, it's time to make a bold action. Hey, moving from Pennsylvania to Alaska, people looked at me like I was trying to colonize Jupiter or something there back in Pennsylvania. They thought that was ridiculous. It was a bold move. I knew that's what I wanted. Buying a fourplex, it was a bold move. I knew it was good for me. Launching the Get Rich Education podcast was a bold thing. I knew that was good for me. So it's about being bold.
That's great. Keith, let me know, how have you built your teams, and what advice do you have for team building?
It's really networking at in-person events. Networking in person. We're in a virtual world now, and I'm very, I guess more tech savvy than most people anyway. But you just can't say enough for getting around the right people. And whether that's at your local real estate investor meeting, or whether that's at a national or an international investing conference, find things out. When you meet someone in person in your own town, if you're looking for a property manager, if you've outgrown management, just simply ask others, hey, how did this manager treat you? How did this manager reduce your vacancy? You're going to get it face to face from a peer, and that's really going to help put you ahead when you network in person, and you're building your network at the same time that you're getting a lot of knowledge. So it's really, again, getting around the right people. Just like when I started with the fourplex, it was getting around the right people. I knew two others that had done it. And when it comes down to property management, since the property manager is probably the most important part of your team. If you're looking for a property manager in your own market, when you go sit down with that property manager and interview them, I think one question you should ask the property manager is, why don't you show me your vacant units right now? Show me how you market your vacant units, because that's how they're going to market your property. Okay, so your manager's going to think that, you're just going to go ahead and take a look at their listings to see how they market. And that's one of the things you're doing. But the second thing that you want to do is you want to ask that property manager right then and there, go ahead and pick out 2 to 3 properties randomly that they're marketing, and tell that manager, I want you to have someone take me into those units right now to go ahead and look at those vacant units that you're marketing, because you want to get an idea of how well your property manager is preparing that unit, okay? That's going to tell you an awful lot. And if that manager is worth anything, they're going to let you go ahead and take a look at 2 or 3 of those vacant units. Are they prepared? Do they look good? Do they smell good? Are there holes in the walls? Because that's how they're going to be marketing your unit.
Can you just let the listeners know what team members do you think are really highly valuable and you need on your real estate team?
Yeah, so much of it comes down to that manager and how communicative they're going to be with you. That's probably the number one thing. It's probably even more important than the property. When people think about real estate, they think about the property an awful lot, but the property is really one of the last things that you want to think about. You want to think about your manager and how well are they treating you, how communicative are you, what's their current vacancy rate. So, yeah, it really involves having a great relationship with a manager that you can trust.
Okay.
It's a good point, because a good manager can take something that's 85% and move it to 95, right? Whereas you get someone that just is not, very in tune, or that cannot sell. That can be the one differentiating factor in your property's success. So I think that's pretty good.
Keith, what is your best real estate investing advice or tip for our listeners?
Well, I think I want to think about educating oneself and really finding out the compelling why for real estate. And one's educating oneself. If they're listening to Wheelbarrow Profits right now, I'm sure they're really bought into wanting to educate themselves and really learning about where your return comes from. When you learn a little bit about a leverage, cash flow, all the tax benefits, the inflation hedging benefit, there really aren't many other answers than real estate for how to build wealth. Real estate's created more wealthy people out of ordinary people than any other vehicle, but most people just don't understand how. And when you don't understand how, you have fear, and nothing dispels fear like education. So that's something that's really basic, but it just absolutely cannot be overstated.
Well, Keith, where did you get your education from? How did you start learning about real estate?
Yeah, well, I guess I started learning by doing, and again, it's being bold. I started learning by doing, by buying that first four-plex, and as that first $295,000 four-plex appreciated, I learned about how I could do a cash-out refinance, for example. So I bought that building for $295K in 2002. Just 3 years later, it appraised at $425. And what I did was I took some cash out of that first fourplex to buy a second fourplex. So I only had a 3.5% down payment in the first fourplex, and I really didn't have any of my own money when I bought the second fourplex because I just went ahead and took equity out of the first one. So I educated myself on how I could do that. And see, that act right there, that would scare some people, Jake and Gino. The reason that would scare some people is not just that they're taking on too much. They're thinking about how they're taking on more debt than they've ever had before. Americans have a fear of debt, but you actually want debt. You want good debt because as educated real estate investors, we have the ability to outsource every bit of our debt to the tenant. They service the debt for us. So yeah, it's really getting around, learning about what you need to do. Sometimes you don't need to come up with extra money for a property. You already have the money in equity in what you've already got.
That's Gino's bread and butter right there. You just ripped a page out of his playbook right there. So
yeah.
So
yeah.
I have to ask, what's going on with the coffee? I saw that in your bio. I'm like, you got to tell me about the coffee, man. Come on.
Everyone wants to know about that.
What's up with the coffee, man?
It's something everyone can relate to. I mean, we're talking about housing, a human need. There's coffee, another human need.
Housing,
right?
man, you're hitting it.
Right. Well, starting a few years ago, I purchased coffee farm parcels in Panama. And you might be thinking, why agriculture? Why Panama? Well, agriculture, that might be one of the most underappreciated plays of them all. You know that there will be 200,000 people added to this world just today There will be another 200,000 people, 200,000 added to this world just tomorrow. Those are mouths to feed, and there's less and less arable land for crops. So what I've done in Panama is I purchased coffee farm parcels because I had a great vetted team there, parcels that produce cash flow from the annual harvest of specialty coffee, a market that's really been in a significant uptrend year over year.
Very cool. We'll buy some coffee. Maybe we'll get some water stocks, and we're on our way, right? That's pretty sweet.
Hey, stick with human needs. It's pretty hard to go wrong, yeah.
Wow, that's great.
So you can buy a half-acre parcel of a turnkey managed coffee farm parcel in Panama for as little as $18,000. So I scooped up a number of those. I since went on the ground in Panama a few months ago with my wife, and we walked our own coffee farm parcels. I mean, how cool is that?
That's a nice little vacation. A little write-off for you. Yep.
Yeah. It was a good vacation too.
That's right. That's great. But Keith, how were you introduced to that? I mean, that idea seems like so far out of the realm for the average investor. What made you think about a coffee farm?
Yeah, great question. Again, it's by attending events in person. This company, who I talk about on episode 60 of my podcast, all of episode 60 is about coffee farm investing. Getting around events, seeing this company go ahead and present in a number of very well-regarded forums, and really getting a good trust factor for that particular provider to make coffee farm parcels provide cash flow for investors, most of whom are from the United States.
Jake, you know what I'm doing after this podcast? I'm going to listen to podcast number 60, Jake. You with me?
Write that down. I'm in. So what about the current real estate portfolio? What's that look like right now?
It's mostly concentrated in multifamily property in Anchorage, Alaska. There, Jake, and I'm pretty concerned about that. With the price of a barrel of oil and layoffs being announced, we talked about
it's creeping back up on you here. You'll be all right.
A little bit, yeah. We talked about the market being more important than the property, but yeah, it's mostly with Class C multifamily units in Anchorage.
Gotcha.
That's great.
What do you say your best habit for success is?
It's probably outsourcing lower use tasks. Just go ahead and write down a list of maybe 30 tasks that you do throughout the week and just keep skimming off the bottom 5 or 10 that you can and outsource them to others. I mean, we're in the era of the availability of VAs, virtual assistants. I use sites like Fiverr.com for someone to do my graphic art for Get Rich Education. I use a site like Upwork to go ahead and find my web designer for GetRichEducation.com. A site like Hire My Mom is a great way to go ahead and hire someone.
Easy there, Keith. Easy. Come on.
Not literally bringing my mom in, but a site like HireMyMom.com where you can find an American-based virtual assistant that can actually write like a good business savvy email to maybe a guest for the podcast or something. So it's outsourcing lower use tasks.
What is your biggest mistake in business?
Oh, that's not a short answer, but I'll make it short.
Sure.
I would say the number one thing, it's managing my own properties for too long. I managed my own properties for 5.5 years. And, a lot of the reason I did that is old timers told me you've got to do that, Keith, because no one will take better care of your properties than you. And you know what? They were right, but to do it myself and lose that much lifestyle just to get the last 3% of management perfection is not worth it. So, you've got to come to know that property managers are low paid and unappreciated, and investors are the ones that are well paid and living well. So I recommend self-managing for a year or two if you can to learn management from the inside. After that, again, outsource to a property manager. I managed too long.
I feel like I'm talking to Gino right now. What is your favorite book?
Well, it's not a very original answer, but Rich Dad, Poor Dad. I read it back in 2001 by Robert Kiyosaki. It changed my mind and my life and the way that I think. Maybe another book that you haven't heard of, though, is one of Robert Kiyosaki's Rich Dad advisors, Garrett Sutton's book, Loopholes of Real Estate. Just really explains well the compelling why and the numbers behind why you want to get into real estate. It's Loopholes of Real Estate by Garrett Sutton.
Cool.
I love both those books, and I recommend them to everybody. And Garrett Sutton, he's a great rich dad advisor. I mean, great attorney. He's got books on forming entities and all. I totally agree with both of those books. Jake, you are talking to Gino part 2.
I know, it's freaking me out. What a best deal and why?
The best deal, if it wasn't starting off with the four-plex, it's probably a 1031 exchange that I did. When I sold those first 2 four-plexes, did a 1031 exchange and bought an 11-unit building and a 9-unit building with that equity. So again, I really wasn't using my own money. I was using accumulated equity in the first 2 four-plexes. I sold those 2 four-plexes for $1 million and replaced it with $1.7 million worth of multifamily buildings, an 11-unit building and a 9-unit building. So I went from 8 units to 20 units. First of all, that makes me more stable. If I have 2 vacancies with 8 units, I have 25% vacancy. If I have 2 vacancies with 20 units, I have 10% vacancy. My leverage ratio jumped up from 3-to-1 to 5-to-1, and my monthly cash flow went from $1,500 up to $4,000 just within those buildings when I traded up. So again, it's not having a fear of debt. I took on more debt than ever when I did that. My debt's outsourced to my tenants. As long as the income exceed the expenses, I'm in good shape. So really my best and most lucrative deal ever was doing one 1031 exchange where I traded away 2 buildings and bought 2 bigger ones.
Fantastic.
That's great.
What project are you excited about right now?
Oh, well, there's a number of them. I'd have to say the Get Rich Education podcast, which I launched about a year and a half ago. It's just really attracted better guests and more advertising interest than I ever would have imagined. I've had most of Robert Kiyosaki's Rich Dad advisors on the show with me, including Garrett Sutton, Tom Wheelwright, Josh and Lisa Lannon, Ken McElroy. Definitely a project I'm excited about. Definitely a way to get my voice out there. And it's being bold and overcoming fear. I was voted as the most quiet and shy student in my high school senior class. That's even memorialized in our yearbook. And yet, I'm basically, running one of America's top investing shows now, and it just doesn't seem to match up. So I think if you're
Don't forget
bold,
Coffee Mogul. I love the coffee.
Yeah, not quite. That's not the project I'm most excited about, but yeah, I think just being bold and overcoming your fear once you know something's right, and that's definitely a project to get excited about once you know you do that.
What is the best way for the listeners to get a hold of you?
Oh, well, it is through GetRichEducation.com or listening to the weekly Get Rich Education podcast, where we use an abundance mentality to invest, especially to invest in real estate, and it's for for an outcome of a lifestyle improvement, because you don't really just want more doors or just want more cash flow or even want more time. You want an outcome of lifestyle improvement. It starts with an abundance mentality. It has the conduit as real estate investing, and your outcome's lifestyle improvement. So that's what we do at Get Rich Education.
I took a lot of notes. You're obviously a student of the game. There's no doubt that you've definitely you've done your research, and I love the first thing you said about getting paid the 5 ways. No doubt, I think that was spot on. Aggressive returns, 25%. That's fantastic. You're killing it out there. I think the biggest takeaway, though, which people may have just overlooked, was be bold. There's no doubt, man. Get in there, make it happen, right? You could have sat on the sidelines, but you went out there and you did it. You didn't talk about it, you just did it. I think that was great. Get around the right people and use virtual assistants. You definitely scaled your business up after 5 years there, so congrats there. It's been a great podcast. We really appreciate your time, and maybe down the road we'll do this again, Keith.
Oh, thanks so much, Jake and Gino. And just like I sign off every one of my podcasts with, I'll tell you, don't quit your daydream.
Very good. Thanks, Keith. Take care.
Thanks.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.